So today I want to talk to those out there that are like, I'd really like to get pre-approved to buy my first house, but I'm really reluctant because I don't know if my credit's strong enough. I don't know if you can qualify my income, and I don't have that 20% down that most people are telling me that I need. So today's video, we're going to kind of put those all in perspective. And then yes, at the end of the video, I'll go over my economics data with you and where mortgage rates are today. So I have about 10 consultations, about 10 or 15 consultations with new home buyers every day. And my whole team, every one of us has about that. And what I usually go over is I'll sit there and say, okay, what questions do you have? And then I'll listen to all the questions that they have. And then I'm like, okay, now here's 3 of the main areas that we really need to focus in on. And that is credit, income, and how much money you really need for your down payment. So let me go through this with you, and I'm going to put this link like I do every other video that I post. I'm going to put this video or this URL to this website down below so you guys can do your own research. So what we want to talk about, the first thing is, what is your credit score? So we're going to look at this. What do lenders look at when they're looking at your credit report? So let me just go backwards a little bit. And this is the data. Please focus in on what it's telling you, but let me get you a real world perspective of all this. Okay, so let's break it down. You probably heard last month or the month before, the Biden administration made some changes penalizing those out there with really good credit when they're buying their first house. So that was more of a smokescreen that was happening. So let's look at it in context. Here's what I look at when I'm dissecting a loan application for a first-time home buyer. So the first thing is we look at their credit reports. And I don't know if you believe it or not, but you can actually buy a house with a credit score all the way down to a 500 credit score. Now, I wouldn't suggest if you have a 500 credit score or even worse, maybe looking into buying your first house before you really look at your credit and see why your credit scores are so low. Because if you haven't ever paid a bill on time and you're going out to look for your first house, or maybe even rent an apartment or lease something, you're probably going to get denied. So we really need to build up that credit, but you still can qualify with a 500 credit score. That's first. The next thing is, how do you qualify for a lot of the first-time home buyer programs, thus requiring less of a down payment? So there's there's a variety of loans out there that you might qualify for. So let's break them down. The first loan is a conventional loan. Conventional loans, if you're a first-time home buyer, you only need 3% down, not 10, not 20, 3% down when you're buying your first house. Now, if you're a veteran or you're looking out in a rural area that you might qualify for a USDA loan, there's 100% financing, no money down. And then the last category we're going to look at is FHA. FHA, doesn't matter if you're a first-time home buyer, you've already had an FHA loan, you could do it again. You only required to put down 3.5% when it comes to buying your first house with an FHA loan. Now, what's the criteria? Why would we choose maybe FHA over conventional or, vice versa? Well, it really comes down to the credit score and how much you're putting down. The biggest piece is your credit score. So if your credit scores are usually below, 620, you have to go with an FHA or a government-sponsored loan. That's conventional, FHA, and USDA. Now, if your credit scores are higher than 620, but let's say they're in the low 600s, so let's say it's 640, it might behoove you to go with an FHA loan. Why? Because you're not as penalized so much on the rate as you are with a conventional loan. So don't be surprised if you get a rate quote on a conventional loan. If your credit score is 620 and you're only putting down maybe 3 or 5%, your rate is much higher than it would be with an FHA loan. So what we usually try to dissect with you guys when you're looking to buy that first house is we say, okay, here's the programs that you qualify for, and then let's break them down to see which one you would best qualify with that makes it more affordable, the less down payment, less payments per month, and so forth. So again, we've analyzed that. Now, if your credit scores are in the 700s, 740, 780, in almost all cases, those should go with a conventional loan. Okay, so that's that part of it. But so that's why you really need to focus in on your credit and credit scores, because normally the higher your credit scores, the lower your down payment requirements and the lower the rate, equaling a much lower monthly payment. So if you want information on that, I actually created a website called creditscoresandmore.com. Check it out, and I'll give you a link right up here to that website. So then the next thing is, a lot of people always say, well, I haven't been on my job for 2 years now, so basically automatically I disqualify. Well, no, that's not the case. We have a lot of millennials graduating college with degrees, and believe it or not, your college actually acts as a job. So if you're just brand new out of college and you just landed your first job and you're salaried, we can use it. Believe it or not, you can buy that first house. So what's usually analyzed and why people say, well, you need a 2-year history is because people, especially in the last few years, especially through COVID, have bounced around in their jobs. So you might have been here for 6 months and over here for 8 months and over here for 6 or 7 months. So as long as we can piece those together, it's kind of, if it's the same line of work, you were doing basically the same thing, but you might have moved for more money. You might have moved because you're relocated. You might have just changed jobs because your other company went out of business. So don't make that steadfast 2-year rule in your mind disqualify you from buying your first house. So we always ask you guys, please reach out to us, go over your job scenario. We'd love to answer that even over the phone before you apply to see if that would qualify you to buy that first house. So then the last thing we go over is how much money do you really need for the down payment? You can even see in this caption right here, do you need to make a 20% down payment? No, I'll be honest with you, I can't even tell you the last time I did a loan when somebody's buying their first house. It's a single family home and they're putting 20% down. Now, it's very much required a lot of times if you're buying an investment property or maybe your second home, but when you're looking to buy your first house, in most cases, you only need between 3 and 3.5% of a down payment. So let me just break this section down real quick for you. If you're a veteran, God bless you. Thank you so much for your services. You don't need any money down. 0% down. It's 100% financing. The next piece of the puzzle is if you're looking in a rural area, and it might not even be country. There doesn't have to be, farmland and cows and everything. It might be a rural area that actually has condominiums, townhouses. It's a subdivision. Just check in, and there's multiple websites you can go to. Best thing I would suggest is just Google and just say USDA loan property location. Just anything of that. It'll take you to the map. You plug in the address. It'll tell you if that property qualifies for a USDA. If not, then you have 2 other options to look for. If you can go with a conventional loan, like we said, if your credit scores are high enough that deems going with a conventional loan, well, then in most cases, if you're buying your first house, you only need 3% down. 3% down. If you don't qualify for that, or we determine that FHA is the realm for you, or the best program for you, then you can go with an FHA loan with 3.5% down. So I'm just trying to clear up the misdemeanors or misinformation out there for people when they're looking to buy their first homes. So that's the basic 3 things that mortgage lenders look when you're looking to buy your first house and when they're looking at your mortgage application. So without further ado, let's get over to the economic calendar for today. Today we see here, there's a robust market and the markets are kicking right now. I haven't checked the Dow Jones. I'm thinking that might be down, but let's just go over what our economic news is today in regards to real estate. Because when it comes to real estate, I hope to be your one-stop shop. And if you're looking to find details, is it a good time to buy or not? I don't know that, guys. It's only up to you guys. But if you're kicking the tires, you want to say, hey, what are rates looking like? What are the costs? What would my payment be? Do I even qualify? Well, please reach out to us. I'm going to give you all my information after this. But let's get over to the economic calendar to see how the economy is going, because the better the economy is going, maybe it might be more of a better time for you to start looking at that first house. So in today's news, we see building permits. They are up, and they're up huge. There is more and more and more homes being built at this time than we've seen in a long, long time. And it's needed because there's a housing shortage. And thank God for the housing shortage, because that's the only thing right now propping up home prices. Because if we had all the houses on the market that we usually have with today's rates, the housing would be dismal. But many, many people are staying in their homes that have refinanced in the last couple of years to 2, 3, 4% interest rates. They're not putting their houses on the market. So new construction, building permits is the future. So they're picking up the slack for us right now. You can see that on the numbers. They're up considerably where we thought they would come in. Core durable goods, it's saying the economy is starting to ramp back up again. This is not good news on the federal level, but it's a good news for you and me, us working class people, in regards to having a job. CB, consumer confidence. I don't know how in the world consumer confidence is up, but you have building permits up, you have core durable goods orders up, you have new home sales way up. Well, People's confidence are starting to get up there a little bit higher than where we were. Coming up in the next few days, we have the Federal Chairman Powell coming up, oil inventories coming out, GDP coming up, gross domestic product. You can see that on your screen. And then on Friday, we have the one number, the big number that the Federal Reserve monitors, the core PCE. The PCE is the inflation number that the Federal Reserve mainly watches. They give that the most credence, and we're going to watch that anxiously to see where that's going. They're predicting right now that that's going up 0.4 for the month. So let's go into the bond markets. What's the bond markets telling us in regards to rates right now? Well, this is what I see on my screen, folks. Why? Well, I'm a mortgage advisor. So I'm here to I monitor rates, I monitor programs, what's going on, what's best for you guys. So what we watch on this to kind of figure out what's going on with mortgage rates is we don't watch the 10-year treasury because that's old information, okay? If you ask somebody in the business that's been in the mortgage business for a long time, or even some newbies, they're gonna say, well, you watch the 10-year treasury. No, that's wrong. What you want to watch is the mortgage-backed securities. It's a mortgage bond that trades on Wall Street that's right here on the screen. We can watch it. What you're seeing on your screen right now is you're seeing the number 98.33. What that is, that's the price of the mortgage-backed security bond. The number next to it says minus 13. So that's what's happened so far today. So the price of this bond has gone down 13 ticks. All you need to know is if the number goes down, rates are going up. If the number goes up, rates are coming down. There's a flip-flop. There's a yin-yang. There's a difference there. So that's what this means. So mortgage rates are going to go up just a little bit today. Where are they? Well, mortgage rates have ticked up one tick already. And we're seeing here's the top 6 programs people use when they're looking or monitoring mortgage rates. This is issued by Mortgage News Daily on a daily basis. So these are the top 6 products out there that people use, from 30-year fixed mortgages all the way to 30-year fixed VA mortgages. You can see them on the screen right now. This scenario right now, and you're seeing on your screen, is probably what a rate would be right around the range if you were the first-time home buyer. Let me give you the criteria of this. So what this is Mortgage News Daily, they survey lenders all over the country, and they say if you had a borrower that was in this scenario, they had a 740 credit score, they were putting 20% down. So remember, 740 credit score and 20% down, that's not normal. That's a good credit score, and most people aren't putting 20% down. So I just wanted you to be aware of that. However, and they're a first-time home buyer, it's their primary home, and it's a single family home. It's kind of basically where your mortgage rate would be. So if you're like, Dan, you quoted us a rate and it's a little bit higher than this, well, you might have not been putting down 20%. You might have not had a 740 credit score. You might have not had the criteria that fits that. So how do you find out what you qualify for and how much you can get, and what's all the numbers would look like? And if you're looking to buy your first house, well, just check us out at therateupdate.com. This is my website. You can introduce you to the Frio team. The best way to reach out to us is multiple. If you'd like to just kick the tires and say, I'd like to call in and just ask us some questions, well, just do that. Our phone number is 844-775-5626. If you're like, this enlightened me, it looks like I might be able to qualify for a home. What should I do next? Well, just click the apply now button. So what's going to happen is you'll apply. Within 48 hours, we're going to get back with you and just talk you through this whole process. How much are you looking to pay? How much are you doing this? And we'll walk you through the process step by step by step. So that's our video for today, guys. I hope you enjoyed it. And if you do, all I ask you to do is this. Just do 2 things for me. Give us a thumbs up, subscribe down below so every time I post a video, you get an alert. Thanks so much for watching, guys. God bless. Have a fantastic day. Hope to see you tomorrow. Bye-bye.